Good afternoon, Scott Redler T3 Live. Welcome to today's recap. It is Friday, my first day back in front of the keyboard and looking at the screens, but you know, I actually was a lot like a lot of you out there for the last week and change on vacation, watching the market, knowing levels in the back of my hand, having a list of stocks, doing things that you could do if you're not a professional active trader. We try and teach everyone how you can make money in the stock market, even if you're a doctor, a lawyer, a police officer, a teacher, whatever you are. There are ways to be a swing trader, ways to hold stocks that could potentially be long-term plays, and then obviously our bread and butter, which is very, very active if you do it professionally. So my first day back, as far as the market's concerned, 2 weeks ago, 3 weeks ago, it looked as if it was going to break lower. Every opinion out there said we're done, and then today you're going to read the newspapers about historic highs in a lot of sectors. So the question is, how did you handle it? How are you reading the newspapers this weekend? Are you pissed? Are you like, the market's got me, I can't believe it. This can't be centrally planned markets, that it's going up on no volume, I can't trust it. Everyone on Twitter says that, one day is going to come, blah, blah, blah. Or have you been following pivots, looking for strong stocks, looking for setups, using a tier system, doing all the things that we try and talk about and advocate on Twitter, in the Redler All Access Note, in most of our products. We try and just teach you how to approach it with a plan versus, ranting and raving about, and just what really goes on out there. So with that said, let's just go to the charts and start going through them. I like to always go back to this day because this was the day that I came in net short, was thinking that we were going to test a 200-day, wanted to add below this range. This was after we failed at 2060. Wrote down this. I think every one of my Redler All Access Note had all these pivots written down. This one was 1989 going across. Would we break below it, close below it, stop everyone out playing versus have people add to shorts for a potential real move lower? Because at this point it looked like a head and shoulders top, where from 2100 down to 1990 you were talking about a measure move to 1920, and then in one day it changed. Look at that. One day, this move below to come back above, that was the day to take notice. I've talked about days to take notice so many different times. I've done presentations on them for Schwab, for T3 in Vegas, and the New York show in different countries. That was the day that I went from net short to flat. I didn't really believe it yet. I was like, you know what? It's been back and forth, maybe it's more distribution. Let's see if there's any type of small follow through to see if there's any kind of power. So you go back to the chart and you'll see next day this happened. Oh, look at that. Now you have a move above a pivot, okay, which we've seen many different times. You saw it here. You saw it down here with a little bit of a different pattern. But basically a lower pivot was taken out. Okay, so right there, unfortunately I didn't have this day and a half trade, which is a move that I like to grab. Instead I just said, you know what, I'm going to go from short on the brain to neutral to positive. Okay, then what I want to do is I want to see what happens here, and then I want to see what happens, if there's commitment. Because right away you had to push through, and remember on this failure, everyone said that's it, we're going back to the bottom of the range. That's when we were talking about, can we hold 2040? And we did. So this is really the spot that you had to say, okay, I'm going to be putting on positions here. If you miss this spot, fine. In this consolidation, it wasn't too late. You had 2040 to 2060. That was your spot. And then the next thing was to figure out if it could get back to the highs and how it would handle that. So lo and behold, okay, went through the highs. It's hovered for 1, 2, 3, 4, 5 days. Today, this morning, it was the first morning they tried to stop some people out. So what did they really do? They tested the 8-day moving average, which has been holding ever since the second day, which what do we like to do when the market's above? We like to be long when the market's above the 8 and the 21-day moving average. So even this one, okay, and you're supposed to be in some kind of portfolio approach taking advantage of it. And then later in the day when the news came out that Greece was going to get their 4-month extension, they're kicking the can down the road, yada, yada, yada. We took out 2102, which was your next pivot point, to close near 2110. So within that little process, I showed you 4 or 5 decision areas on how to adjust your process on thinking negative, neutral, neutral to positive to very positive. So with all that being said, that's where we are with the S&P, so we'll see what happens. Maybe there'll be news out of Greece saying, they're not going to have austerity, they're not going to take the 4-month whatever, they're not going to, who knows. At this point, each time that kind of news headline was met with buying and the trend is held, so as long as that stays intact, you can go with it. And then you go to the mid caps, which help lead the way itself. Okay, I was focusing on the Russell, but a few guys on Twitter were like, hey, red dog, look at the mid caps. It's breaking out well before the Russell, so that gave me some clues to stay with that and be long it, especially when I was on vacation. And this too came in, tested the 8-day, closed above the pivot, and you just had a 4 or 5-day consolidation, so it could go again. It's not extended actually. Look at the size of this base it was in before leaving. Some might say even the measured move, just say if you go with a channel 255 to, what is this? This is almost 270, so 15 points, that gets you almost 280. But anyway, that helped lead the way. You had the Russell, which is something that I talked about many times. He was at one red dog reversal there, went to the top end of the range, pulled back a little bit, gave you another red dog reversal into the 21-day, broke above it. Today it held the 8-day, nudged higher. It's above the prior peak. Still looks really good. As far as the Qs, very powerful. Apple's helping do that. Cleared. This was the first to clear this downtrend. Okay? Here was your red dog reversal. Here was your push into the downtrend. Couldn't do it here, couldn't do it there. On this day, even if you missed this reversal here, this was your day to cover your shorts if you had short on the brain and perhaps get long for what has been a nice move there. As far as the financials, this was a little different, okay, a little battered and bruised. Went below the 200-day, gave you a nice red dog reversal. You could use this 23 as your level. Quick move, a little bit of follow through, and then had a decent reversal today. So we'll see if some of the banks continue. So with that being said, lots to like, lots of spots to look at in all these charts. Okay, as far as some people want me to go over some things from my Redler All Access platform, as well as my 2015 report, just to talk about where we are now. Okay, in my report, I write a report. I've been doing it for 5 years. You can Google Redler projections, whatever, and you'll see some big calls made out there and some just consistent, nice trades to take. So let's start out with security software. Cyber, okay, at this point, I don't think you could chase it, okay? The start of the year right here, I talked about the wake-up call on the igniting bar right there, and held firm, and boom, look at that. Another nice little setup is you could have waited till after the earnings, took out the earnings high. There you go. At this point, hopefully you're not fighting this, and if you've been trimming, trailing it, or you had options, congratulations, you made a lot of money. Good for you. At this point, you cannot chase it. It's so extended, but that doesn't mean it's a short. FireEye, my other one. We talked about this channel so many different times, how long it's been stuck in this channel, okay, with all those botched deals last year. Remember all those botched deals, okay? So anyway, some people took it long into its earnings. I actually just took options and went away. So I had a 35 and 36 with a 40, call spread. And look where it is. You could have waited till after earnings and bought it that day. Gap held, and it just continued, just consolidated once again here. Okay, let the 8-day catch up a little bit, cleared this little spot here of 44.90, and I think the target I had for this was into the 50s, low 60s, and that could have been a really nice move. So far, so good. Hopefully you're in it. Some guys, what they do is they take my report and they put 10 or 15% of their entire portfolio in each position and go with it if they've been doing that for multiple years. Congratulations. Sometimes I think I would have done better if I did that versus trading every day, but then, you know what, I'd be pretty bored. No, I'm kidding. I'd find something to do. But anyway, hopefully one day I'll be like, I killed it focusing on when things really triggered. So, but a lot of guys probably don't just take 15%, put it in every play. They say, okay, I'm going to wait for a red dog to be long on the virtual trading floor, because that means the trade actually turned on from an active trading level versus an intermediate. And there are many different ways to skin a cat. So those were the two stocks I focused on in the 2015 report from that sector. My other one was Twitter. Twitter was going to be my social media stock of the year. 2 years ago was Facebook. 3 years ago was LinkedIn. This year, Twitter. So far, so good. Twitter started the year, down here. So if you just bought this to start the year, actually right around here, you've done pretty well for yourself. If you waited for it to clear this little spot, this is when I actually bought the options for earnings. Then if you said I'm going to wait till after earnings, it's got to prove to me, you could have bought it versus the gap here at 45.80, and now, today was a little bit disappointing. I would have thought it would have had a little bit more follow through, but it still closed okay. Above the 8-day trending, not a blockbuster move, but pretty good. Facebook, just something that we trade. Talked about it when I was away on the VTF. I saw it trying to break above this 77, so I got long it. Didn't tweet about it. I didn't have my Twitter going on vacation, so if you saw it there, I think some guys got long, and decent commitment today. In my opinion, looks pretty good. I think at some point, we're going to see it take this out, and just a matter of how it does it. It's been in this long channel for quite some time now. For Apple, in my report, I talked about it getting to 130, and got there pretty darn quick, almost. Might be there Monday. And I remember talking about it after earnings, how to buy it versus 115.30. If you did that, you've been sitting, doing great. Or you could have added some here above this 120.51. I was in it for this nice 3-day trade, sold it because I was going away, kept the call spread, and missed a little bit of the move. But it is what it is. I think I did the same thing here. That's my problem. My problem is I don't stick around long enough, and I should trail them better. I had this, into this, got out. I think I did the same thing here where I got like tier 2, sold these 3 days, and then missed the last 25% of the move before it broke the 8-day, and then got back into consolidation mode. So, so far it looks good. Good for you. If you're still in it, and guys are still trading, and I got to get back in sync with that. But again, last year when it was at 77, I said iPhone to head, it's going to 100 plus, and it did. This year I said, you know what, 130, because a lot of people were saying it's going to fail. I'm not going to name names, but anyway, it's done pretty good. Hopefully you're in there. Some other stocks that just not even on the report. I'm just going to go through as I have it here. This Google not really acting well. I actually was long it when I left. Sold it into the 200-day because I wasn't sure if it would hold it or not, and so far it's still a little wishy-washy. Has a lot to prove. Two better stocks out there have been Netflix. Nice move after earnings, above all the moving averages. Here is your gap up. This is the continuation move, and then it consolidated, went sideways. I think I posted this chart before leaving, and now look at this nice move. Still above the 8-day, still trending. I would not be thinking of shorting this for more than just a cute one, unless it breaks and closes below that, and then still, who knows? 21-day could serve as support next. But stocks that are above the 8-day moving average or the 8 and 21-day are longs. They're not shorts. And then you can use a tier system based on the price patterns. Amazon, what's this doing? Big gap up. There was a nice trade thereafter. 359, not as good as Netflix, but then consolidated again. Tried to go, failed a little bit, but what did it do? Held the 8-day. 8 days curling up. Now it looks like it's making new highs on 2015. When stocks are above the 8-day moving average, you do not short them. You try and trade them long. When they break them, then you get a little flexible. While I'm talking about that, TLT, a lot of last year, was very good to the trending to the upside. This was the most recent trend when it, broke this pennant right here, got above the 8-day and stayed above it for 2 months almost. And then what did it do right here? It broke the accelerated trend, right? And that was your out right here. Okay, talked about it, listed the chart, 136. And then from there, is it above the 8 and 21-day moving average, trending well, or is it now below? It's been below it. You stay out of the way. You short it. You stay flexible, until all of a sudden it reclaims it and starts somewhat of a new trend. At this point, I wouldn't be heavy short there. It's come in a lot, but hasn't given you any more than a quick little day-and-a-half trade failure, not even a half failure. So at that particular point, so right now all you know is 125.92. That's what you trade against. As far as Baba I haven't really been active with. I did have this on my my Redler All Access 2 that I think it would hit 130 versus 60. Last year when it came public, when it was tight, this is the same call here. When it was a 90, I said it should get to 120. It hit 120, and then it consolidated, and then it stayed in this trend where it just didn't do much. And then I don't take stock into earnings, so we don't sit in this for that. Okay, and then it looked like maybe it could try and fill the gap and didn't. Stayed weak. So this has been out of play, weaker, and just something that's not a focus. Okay, it actually became less of a focus or just a trade on this outside day red dog reversal here. And then it, got very choppy. Was it above the 8 and 21 day like it was when it was, moving and trending well? No. It was in consolidation mode where you never know when that changes. Last time I tried it, I think was into this, and then what happened? It failed. That was a nice trade into the upper end of the range. Looked like it could break above this. Could, because we watch, anticipate, waiting for the market to confirm it. What did it do? Broke below it, got me out, and I haven't really done much with it since. At some point, maybe there'll be a trade here. We shall see, but it's going to have to really show me something to get back in there. Another loser so far from the morning note was my potential speculative takeover play, okay, and that was Pandora. So this too, though, had a really nice move into earnings. I do not really take stock into earnings, okay, take options. I did nothing with this. At this point, started the year somewhere around 1675. It's right around here, not trading so well, but we'll see what happens. This was supposed to be an option play, unless it's, it's a trade where you take an option play, maybe something happens to it. You never just trade a stock for an acquisition because you never know when that's going to happen, and if you do, you're probably going to jail. This was just a thought. Started the year off well. So if you traded it in the start of the year, right here, nice igniting bar, another move and sold it and said, oh, you know what, I'm a trader. I don't take stock into earnings, or I just made good money here. Let me buy some calls, for earnings, and then boom, you would have got a zero. But no big deal. You took calls. Risk is premium paid. You didn't take stock into it. So with that being said, today oil was a little weaker. So we'll see how that transpires next week. You look at oil, it's still in this range. Market's kind of comfortable with it in this range. If the USO would start breaking below this little pivot here, which is, you have support 1 right there, support 2. So really give it to 18, but close below 18 and everyone's going to start talking about retesting the lows, and market might not like that, but we shall see. XLE, what'd you do today? Kind of still trending, has a lot to prove. It's been broken. Here was your red dog reversal down here, right there. Okay, had a quick move, little higher low. It's trying to stay above the 8 and 21 day, but it's, again, look, it's broken. It's below the 200 day. It's below that. So it's, stocks like that don't move as well. A lot of bad memories in this one. Look at this, since breaking, the 8 and 21 day there, or breaking the 200 day there. Since then, it's just been really a trade. So I do trade that from time to time, but I haven't been sitting in it. Some guys are sitting in it, and if you're sitting in it, that's fine. Just make sure, if it changes, you change. Then in retail, some guys were looking at some retail names real quickly. I know Sperling like Costco, had a big move, possible day 1 right there. Under Armour, possible day 1, holding the 8th day after a consolidation. It's been pretty damn cold out there, so maybe that helps some. Under Armour, 1 breakout, a start, so something worth watching. Different type of trade. Some guys were bottom feeding Walmart. Did a red dog reversal today where it, and not really an exact red dog reversal, but open lower, reversed, came back above the prior low here of 83.38, closed strong. So still has a lot to work off there as it's below the moving averages. Some guys were saying Cisco, which was my mega cap stock of the year. Okay, last year it was Intel and Microsoft that had a good move. This year it was Cisco, and Cisco had a good report. So if you do not take stock into earnings, where you didn't just buy 15% of every position, you said I'm going to wait. Well, you had your gap up here. Okay, it's now gone. It's been consolidating for multiple days above the 8 day. So it looks like it could continue. We'll see what Mr. Chambers says, but ultimately this has been the best in breed mega cap. Looks a little different than Intel. That gap down, and kind of regrouping. This too, the market wants to trend. Someone's going to be like, oh, Intel, it's not extended. Maybe there's a laggard trade here to fill the gap, but we'll see. But this Intel and Microsoft, below all the moving averages, look a little different than Cisco, that has been stronger and has cleared them all. So just trying to show you the differences there. So here we are, With all that said, I probably have a lot more I can go over, but it's first day back. I'm tired. It's Friday. It's ice cold out here in the Northeast. My boat this morning friggin' was like the Titanic. We were stuck in the middle of the Hudson. I was ready to, grab my goggles out of my bag, but I didn't know if I've only trained for 45-degree temperature water for San Francisco, not whatever it is there, freezing. So, but thank God we were okay. But a great day to start. Great way to start the week back. And just figure out what you've been doing and how you've been doing it. And if you're not having success, change it a little bit. It's only February. There are going to be headlines everywhere this weekend about all-time highs. You're going to hear about NASDAQ 5,000, only 2% away, which, when we hit that thing back in 2000, PEs were out of the yin-yang now. There are buybacks. They're full of cash. The PE, I think, for the Qs is maybe 33. So it's not so crazy. I know in 2013 I said for the last year that I think in 2 years for 2016, because I wasn't sure if it would be 1 year, we would see S&P 2,000 and NASDAQ 5,000. Well, S&P hit it, and we're very close to NASDAQ, so I'm not trying to beat the chest. I'm just trying to show you that it could happen, and historically with the percentage gains over time, it's not so out of line. But again, you want to wait for the market to be above the 8 and 21 day if you're an active trader, and if it is, you start a portfolio, you let the market work for you, then use your system to add cash flow around price patterns, and you keep taking trades and netting money and booking money, and it adds up. If you don't and you have bigger time frames, then let them go and let them run, because there have been a lot of winners out there that have made people a lot of money. But that's only if you educate yourself and you learn how to approach it, versus having opinions, being frustrated, and listening to all the doomsday guys that say the world's going to end. And if the world ends, we have a lot bigger problems than the stock market going down. Have a great night. I'll see you Monday.